Hi there, welcome back to our training sessions. Today we are going to cover cancellations and credit notes to show you how to do this. Now again, I reiterate the fact that we do segregation of duties, and you are going to be required to have the permissions available to run a credit note. So we usually do not allow an invoicing clerk to run a credit note either, because of the fact that it can create complications and also it can be a fraud risk. So you'll have a certain section of individuals that will be able to do credit notes. Now, I need to be very frank here. Credit notes and any accounting functions other than allocation of receipts usually require a dual factor authentication. So what does that mean? It means that you are going to have somebody that is going to literally raise the credit note and push it to the system. Then what's going to happen is that person will have to go and co-authorize it first, and then it needs to go to a manager, and then they are going to have to authorize it second. And at that point, this will then pull down and you'll see your credit note will then appear. So it's just a control mechanism to make sure that there isn't any particular fraud going on, and to make sure that you have got this thing sorted on your side. So in order to do this, the first step is you have to go to accounting. Okay, now similar to what we did before, we have to type in the invoice number that we are going to try and credit. We are going to search. Okay, so we've got the invoice there. We can see it's all paid. It's all very good and well, and we're quite happy with what's going on here at the moment. But now we are going to say this particular invoice needs to be credited in full because of the fact that Llewellyn, in his 15-day window period, decided he doesn't want the policy anymore. So this needs to be refunded. Now this can either be refunded straight back to Llewellyn if he's paid it in cash, or it could be refunded straight to Llewellyn's finance account. So as we've determined now, we would like to now credit this invoice. As I said, Llewellyn's decided that within this 15-day period, he's actually changed his mind about the policy. And we've established that this is possibly under finance, so therefore we have to refund back to the finance house. But we're going to show you all this in due course. Before we get on to this exactly, there are two particular buttons. So there is create an invoice credit and there's create a cancellation. Now, what's the difference? Creating an invoice credit will effectively credit the entire invoice. So this is in the effect where you have made a mistake on the actual invoice and you need to redo it. You are going to continue with a create invoice credit. Now, that is not something we're doing today. Today, we want to literally refund the amount of money due to Llewellyn within his 15-day grace period. So in other words, we're going to create cancellation. So in any event, whether or not you're passing a refund, and you are only literally cancelling a policy, not the whole invoice, you are always ever going to use the create cancellation button that I'm flashing on the screen now. The create invoice credit literally is to correct mistakes if you need to re-invoice policies under a different name, or because something went wrong during your manual invoice process. So we're going to start off by creating a cancellation, and you'll see when you look at the two screens on the video, they are quite dissimilar. Now, there are a couple of options here that you need to have a look at, and it's quite intricate here. So forgive me, this video might be a little longer than our usual. So first of all, we get the NTU, or the credit note, or the cancellation. So these are the first two buttons that we need to select. Now, NTU will be literally we're giving a full credit upfront once the way through, but a cancellation is we're cancelling the policy, no more on risk. Okay, so this will be for the fact of if you're doing NTU, you may be invoiced something on that particular invoice number. There's 5 products. There were only supposed to be 4, and you want to NTU one of them. That's where you're going to use NTU. You can also do a payover refund, which means you're going to just refund back the entire payover. But for now, let's just do cancellation. You're going to have a choice between time or mileage based. Now, these two options will only be applicable if you are going to be using this for service and maintenance plans. So usually time-based is exactly what you want. At this point in time, it is time-based. If you are doing a maintenance plan, and you have got some claims on that policy, you will want to switch this to mileage based so that you are able to then only use the calculation based on the available leftover kilometers on the policy. Time-based will always say, right, how many days has the policy been on risk? How many days has the policy been off risk? And will only, if this is a partial cancellation, this will only then give you a refund or a full refund on the amount of time that's still off risk. So whatever was on risk, you will keep in your bank accounts. It's going to issue it to Llewellyn's Motors. It's going to give the same customer VAT number, and now you're going to move on and do the rest. So it's going to tell you who's creating the credit note. For audit trail purposes, it's going to give a date and time that we are creating the invoice. Now, why do we do that? Because of the fact that, unlike our test scenario here, you might find that this policy is now at a 30-day level, but the client decided to cancel it within 15-day level, but you only get the notification from Westbank or whatever within the next 60 days. So this allows you again for the cancellation date, and this is where we do the calculation on, to set your cancellation date back to a point in time where the initial cancellation was due from. So let's say the car was written off. The bank has taken 38 days to get you the actual physical note to say, hi, please cancel this, the car's been written off. This will allow you to now go back and set a date in the past to make sure that your calculation works accurately and you are giving fair value back to the bank. So for now, we're just going to say the 11th because everything we've done so far in this particular module has all been on the same day. Now we're going to say, why are we doing a credit? So effectively, we've got a whole list of predetermined requests that you are allowed to choose from. Bank requested, so we're going to just say here client requested for now, but you can choose whatever suits you when you're doing that cancellation. Additional, client didn't want the policy. So if there was something more to just a simple client requested, what you effectively want to do there is put in as much additional information there, because that saves as a note. And the more information you give, if you're not there and someone has to look this up and say, well, why was it credited? Or if you are in an audit process and the auditor says to you, well, why was this credited? Then you've got as much information as possible. I'm always a strong believer in notes and making notes and recording what actions you take, because of the fact that it allows you then to recall what happened in the past. Now, because we are in within 15 days, this is going to give me an option between a partial or a full credit. If I'm outside of 15 days, it's only going to allow me to do a partial credit. So here we're going to say full credit at this point in time. Now, I'd like to show you a trick. First of all, you have to select the policy. What we can now do is we can now say check calculation. Now, this is very important. The system has a very specific way of calculating your cancellation. What it'll do is that the system has a look at how many days has the policy been on risk. Okay, so we've got recon date. So when was this policy first invoiced? We then have a look at how long was the policy. So we do a physical term. Now this could be 30 or 730 or 731 depending on leap years, etc. We actually take all of that into consideration. The outstanding term is 727 days, because this policy was initiated. Although it was reconned on that date, the initiation date was actually the 8th. So this chap has had 3 days worth of cover. So we are only going to refund 3 days if we are doing a partial credit. We are doing a full credit in this case. So what you can see here is full credit is equal to 1, which means we're going to take back the entire part of the commissions. So this is the commission part of the calculation. So therefore, 937.50 Rand is going to be clawed back immediately. This commission part refund will also now find itself into the accounting system under credit note commissions payout, where I'm showing you now with my mouse, so that you can claw that back from the dealership as well. The voucher part, so if there was a voucher, we would now sit here and claw back the voucher. But remember what we said when we set up the dealership. that this will only work if the dealership has that little checkbox to state that we claw back vouchers. Now in this case, we don't have that checkbox. It's going to claw back nothing on the voucher. Then it's going to go into the physical amount of money that we are going to now submit back to the client. So what it's going to do is going to do exactly the same thing. You'll see it's got 727 days. So that is the difference between the initiation date and the expiry date, less the date of time that it's been on risk. It's going to give you all the different fees that are included in here, and then it's going to show you exactly how it works. So it's going to take the credit note amount equals the sales price minus the total claims on the policy. Now, if this was any other policy, and let's say an underwritten policy, it's going to give you a zero amount if there is a claim on it. If you've claimed on a policy, remember, you do not refund the policy. Now, what's going to happen here is it's going to give you the credit note amount is equal to those two figures there. So in other words, my total sales price was that excluding that, less my claims, which we don't have claims on the policy at the moment, so it's at zero. And then it's going to do the calculation, add the VAT back, and it's going to say to you, right, it's going to give you back 10,000 Rand. Because what it's going to do here, it's going to give you back the entire thing, including the commission, because we've selected a full policy refund. So due to the fact that our current test policy is unfortunately within its 15-day clause, I can't show you the partial credit note calculation. All that changes here is that it'll claw back a certain portion of the actual commission. So you're not going to get the full 10,000 Rand back. You're going to get 10,000 less 3 days. So that's effectively what's going to happen. But what I can show you here is that if you decide to do a pay over refund only, so in other words, you are only going to pay back the portion you received as a UMA, and you check the calculation now, what you're going to see is that it's literally going to give you only the pay over figure. So that is another way that you can have a look at how to do these transactions. I'm going to go back to my cancellation. We're going to do a full credit, and you can just check the calculation one last time, and you'll see that we are still doing 10,000 Rand. And the reason for that is that because it's within the 15-day date limit, and that's because it's within the 15 days of the reconcile date. So that is automatically going to force a full refund. Once we're happy with all of that, we can now literally say process the cancellation. So once you have completed that, it gives you the pop-up and says to you that you have created the credit note. Now you need to now be able to go back, and you are now going to have to approve the credit note. And this is where we have the segregation of duties. So all credit note information is happening under cancellations, and you'll see here there's a button called view cancellations. When you click on that button, effectively it's going to show you a list of everything that you are allowed to approve. Now if you need a dual process, you'll see here that this will change slightly. So the dual process is that someone will now need to obviously create the credit and request the credit note. Now, in most cases, the person requesting the credit note will not be able to approve the credit note. So now your second party will need to go and say, well, I approve this credit note, and we're going to say process. This is now going to create two things. One is a document that is going to say this is the cancellation document, and this is customized to you on our onboarding process. It gives you a password, it tells you what the password is, which is usually the client's ID number. You click on OK, and you'll see that we now have our credit note letter stating how it was cancelled. So this will automatically generate the credit note letter first. It has said now that we have approved successfully all the credit note, and we've declined no credit notes, and we click OK. Once it's given you your credit note form or your credit note letter, it's now going to say to you, what are we now going to do? We now need to print out a credit note for this person, an actual physical document. So what you can see here is that we have got for you, or we will have preloaded certain finance banks. So if you choose a finance bank, it'll automatically change to that finance house. If not, it'll automatically default to refund it to Llewellyn, and in that case you'll have to send or enter into my personal details. But if you're going to do it through a bank and it goes to a bank, we have preloaded all the bank refund accounts for you on the system. You're then going to click OK, and that is then going to generate your actual credit note. And this is what you're going to send to the bank and your accounting department to obviously then process any further refunds. Okay, and we now have our credit note that has printed for us. It's also going to generate for you a bank payment file. So what's going to happen here is that it's going to show you that you've got a bank payment that needs to be processed for Llewellyn for the 10,000 Rand. Now this is in the FNB format. Usually you'll have headers here on column A, 1, 2, and 3 that will then allow you to upload this into FNB. If you are using another bank, Nedbank or ABSA, we do have formats available for those. We just do not have formats available for Standard Bank. This can then be uploaded directly into your bank account by your accountant to have the final payment created. And that is how you approve a credit note. And that's your cancellations and credit notes done. So I thank you for watching the video, and we'll see you in the next time. Goodbye.